Hello, everyone, and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Revised Reporting Requirements for the Provider Relief Fund. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I would like to introduce today's presenters. We have Aparna Venkateswaran, Senior Manager at Moss Adams, Melaney Scott, also a Senior Manager at Moss Adams, and Georgia Green, Manager at Moss Adams. Their bios and contact information are located in your webcast console if you would like more details. And with that, Aparna, I'm going to turn it over to you.
All right, thank you, Amy. Good morning and good afternoon to everybody, depending on what time zone you're in today. We're back together to talk about the Provider Relief Fund. There's, as you've probably read and seen, lots of changes that happened when the June 11th post-payment notice for reporting was issued. So taking a look at the agenda, we'll cover some of those updates and changes. There were also a lot of FAQs, new FAQs that were released back in June and July, kind of as part of the updated reporting requirements that were shared. So we'll also cover some of those, and we'll also go over some of the reporting tips based on the guidance that we are seeing from HRSA. And next after that, we did have several participants submit questions ahead of time, and also everybody has the option to submit questions live. So we're going to take a little while to go through some of those questions. We'll also be answering them one-on-one during the webcast here as much as we can, but we'll have a dedicated amount of time to just go through some of the more common questions we're seeing. And then we'll wrap it up and share some resources. Before we dive in, we're going to get into our first polling question. Amy, can I kick it back to you?
Sure, thank you. So our first question is to get a feel for our audience today. It is, what entity type do you represent? And then you have the options of provider clinic, hospital, tribal health, SNF long-term care, other healthcare provider, or F, other non-healthcare provider. And we will give you a few moments to respond. To respond, please click the button next to the answer you choose and hit submit. And if you cannot see the submit button, you will need to enlarge your slide area to see it. All right, we'll leave this up for a little bit longer. I do see some people responding in the Q&A window. You will need to respond on the slide, so it will count for CPE. Okay, here are the results.
All right, thanks, Amy. So it looks like we've got kind of a mix across the board with maybe most of our attendees today from the hospital space. That's good context for us. All right, so we're going to get going here. Before we do, though, I think we've said this in the past too, but just a reminder that everything we're talking about today is based on information that's available. We've unfortunately seen that the guidance has changed quite significantly and quite rapidly over the last several months since the Provider Relief Fund program really started. So just words of caution there that, you know, things could change if there's subsequent guidance that gets issued. Now there are, you know, first round of reporting, we're in that window, and so, you know, the deadlines definitely are critical to keep track of, make sure that, you know, you're complying with the reporting deadlines. And also, again, the FAQs, HHS is constantly releasing new FAQs, and so making sure you have a process to stay current with those. They're often a combination of brand new FAQs, and they also modify previous FAQs. And so it's definitely a good best practice to kind of frequently revisit the FAQs to make sure you're staying up to date. And lastly, documentation. This is a theme we'll repeat throughout this webcast. And for those of you that may have attended the HRSA webcast during, I think it was July 8th, you know, documentation really is critical. HRSA mentioned several times that the burden of proof is on the providers that are going to be reporting on these funds. And so really it's critical to make sure that, you know, you're doing your best to keep all the documentation that you need to support the reporting that you will be doing. All right, with that, I'm going to turn it over to Georgia.
Thanks, Aparna. So as Aparna mentioned, there was a big update on June 11th with this new post-payment notice of reporting requirements. It went from, let's call it a 6-page document to an 11-page document, and it has kind of a narrative description of what you're required to do in this reporting portal. At that point, you know, we were still on standby for the portal to open, and then on July 1st, when it opened, we also received some additional guidance documents, and those are all on the HHS Provider Relief Fund website under the reporting and auditing page. So I definitely suggest everybody head over there if you haven't already and download the resources that are there. So there are things that are very consistent from prior guidance if you've been following along with this for about a year, but some slight changes. So the major thing that this did was create kind of a phased approach to the reporting with various funds received periods that then determine what your reporting timeline is. And so you really have to be mindful of when you received funds, because that is going to determine when you report on those funds. And so if you received more than $10,000 in any of the payment received periods, you must do the reporting for that period. And on our next slide, we will take a look at what those periods are, so don't worry. And then the funds that you receive have to be spent during the period of availability. And so each of these periods has a corresponding deadline that you have to spend the funding by. Also, prior guidance had said that the what they call SNF and nursing home infection control distribution would be kind of a separate reporting process. This newer guidance has actually combined those distributions in with the general and targeted distributions. So you'd be reporting on those simultaneously in this portal. One thing to note is that, you know, you wouldn't have received any of those funds in payment received period 1. So you wouldn't be doing that reporting in reporting period 1, but it's good to know that's what will be coming up in reporting period. Consistent with prior guidance, You are not going to include the RHC testing distributions. If you're an RHC, those were the ones for $49,000 and change per RHC. So those have their own separate reporting process. They have a portal that you log into monthly and report how many COVID tests you performed and positive cases, and just continue doing that as you've been doing, and you'll be fine. Also, the HRSA uninsured program, this is kind of a portal, another portal. I know there's a lot of portals. This is one of those portals that you can actually file claims for COVID testing and treatment of the uninsured and get reimbursed at Medicare rates. That is you should be tracking that and have good records around what you've submitted, what you've received, but you are not going to include that in this PRF reporting process. So here is the timeline that is, straight from the guidance of those 4 periods that they have described. And the first one, payment received period, is April 10th through June 30th of 2020. So this captures really those first general distributions that went out. So for some folks, they got their phase 2 general distributions in this period, and there were quite a few targeted distributions that went out in this time, the SNF distribution, the high impact areas distribution. So, that's not all, but that's what you want to be doing, is making sure you have a good record of every payment that you got and the date that you got it, so that you can tie each payment to which reporting period it falls into, and what your deadline is to use the funds. So for this first reporting period, the deadline to use the funds was June 30th, 2021, just a couple weeks ago. And we're in this reporting period right now. So your reporting is due September 30th, 2021. So this is great that you're on the webinar getting ready to report. In the written guidance, it does say that the period of availability begins with each payment received period, so that would be April 10th. But keep in mind, there's also been kind of subsequent webinars, and there's written guidance as well, that your expenses, your unreimbursed expenses that you're reporting for PRF usage, those can go back as far as January 1st, 2020. And if you've gotten into the portal or started to look at the data entry worksheet, you'll see that the reporting is really on a quarterly basis all the way back to January 1, 2020. And that's true for both expenses and lost revenue. Okay, so other updates. So one update that it was a little new. I know in prior versions of this guidance, there was this 3 approaches to lost revenue, and that is still consistent. And those are actual versus actual for 2019 versus 2020 revenue. The second option is comparing budget versus actual, and that would be just looking at 2020. That was in the prior guidance. And the third option is any reasonable method. So you can really kind of put together what is reasonably your lost revenues attributable to coronavirus. But what is new in this guidance is that now the revenue reporting spans all the way into Q1 and Q2 of 2021. So make sure you close out June 2021 so that you're ready to have those numbers submitted for Q1 and Q2 of 2021 as well. What is really fascinating, and this is a huge change that is, I've seen it be really beneficial for some of my clients, is that this is clear now that it is a quarterly comparison. It's a quarterly calculation. Rather than looking at the entire year, you're looking on a quarter by quarter basis. So if you have losses, let's say you're doing option 1 and you're doing a year-over-year comparison. If you have losses in a quarter, those can count as your lost revenues that you're using PRF funds. If you have relative gains comparing, let's say your revenue went up in Q3 and Q4 of 2020 compared to 19, those really just get set back to 0. They don't offset the quarters where you did show a loss. So any quarter where you show a loss counts, any quarter where you show a gain, you'll report those numbers, but essentially it will just be a zero in the calculation of total lost revenue. So that's a fantastic change for a lot of the clients that I've seen doing this, relying on lost revenue calculations. Also, they've clarified that you must return any unused funds after each reporting period. And they have introduced in really recent FAQs an entire portal to do that. And interest on the funds would be a separate payment. So those are things to be mindful of if you're in that situation. And we'll talk a bit more about returning funds, but you'll want to look closely at those instructions. There's, another portal and another set of instructions around that. Also something to clarify, if you have subsidiaries, this can get a little complicated. We get lots of questions from folks who have subsidiaries that they're reporting on. You do need to list all subsidiaries in the portal, even if it's a subsidiary that didn't receive PRF funds. So toward the beginning of the process in the portal is where you'll list your subsidiaries out and answer questions about, maybe if you've acquired any subsidiaries in this time period. And those kind of drive how things appear later in the portal. So it's important to, really pay attention and get that part right because it's right in the beginning. And you can include any entities that are on your consolidated financial statement or that you have more than 50% ownership interest in. Also, something brand new in this portal and in our June guidance is that there are now survey questions at the very end of the reporting. They should be pretty straightforward, kind of yes/no questions. There is one open-ended question at the very end, although they're not looking for a huge narrative. I believe it's 1,000-character response maximum. But this is a chance for them to understand, how you've used the funds to retain staff or to remain, financially solvent during the pandemic. So with that, I think we have another survey question. Amy, if you would.
All right, thank you. So our second polling question is, how are you feeling about preparing for the upcoming PRF reporting process? A, very comfortable. We have logged into the portal already and started submitting data. B, we are working on it. Not quite sure if we're fully utilizing our award on eligible expenses and lost revenue. C, we are new to this guidance and or not feeling comfortable yet. Or D, not applicable. And as a reminder, if you would like to receive CPE for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And we have several questions coming through, so thank you for that. And if we don't have time to get to your question, we will make sure to follow up with you after the webcast to get you the information you need. All right, it looks like most have responded. So here are the results.
Thanks, Amy. We've got a good mix here today, so I'm glad we can help you all out if you're still working on it or new to the guidance. So with that, I'll hand it off to my colleague, Melaney Scott.
Great, thank you, everyone. So in the next couple of slides, we have included a couple of the new FAQs that were around July 15th when some were posted by HHS. And also, we'll talk about other questions that were posted prior to the webinar and that you have posing during the webinar as well during our time today. But thinking about one of the questions a lot of folks have is, if I have unused funds, when do I need to return them? And HHS has provided that clarity. And so they are currently saying within 30 calendar days after the end of the applicable reporting period. So for thinking about this, if we have a September 30th deadline to report this year, then we'll need to look at 30 calendar days after that, which I believe calculates out to around October 30th, but we can get the calendar and double check. But that's something to keep in mind. You do have that 30-day period to return those funds. And as Aparna had mentioned as well, calculated interest would need to be returned if interest was earned on any of those funds. And then, of course, the question is, well, how can we return unused funds? Pardon me. And HHS has now provided a link and the method by which folks can go and return those funds. They've included the link in their FAQ document, and it's supposed to be available also instructions in the portal as well when we go to reports. And like we touched on, there is specific information HHS has provided. In fact, it looks incredibly detailed, actually, on returning the interest as well. It does appear that this is not a one-stop shop for returning the funds and interest. It looks like there's actually two kind of separate processes for doing that. But we've got the information available to be able to return those. Now, thinking about, because this has been a question, we know a lot of folks are putting in FEMA applications, and that can be a fairly lengthy process. So the question has been circulating, well, if we have applied for FEMA and we haven't heard anything yet, really what should we do? And previously HHS was silent on that matter, but they have now provided guidance in indicating if you have applied for FEMA funds and even if you haven't heard back, you should offset any expenses. You should not, better way to phrase it, you should not be including those expenses on your PRF reporting. So when we think about for reporting expenses, we're going to get to those net expenses or net expenditures, and we would then have that FEMA offsetting any of those expenses that we plan to include for FEMA. So just to avoid the double dipping aspect. If for some reason we have already reported on the funds and we do have FEMA in play and we receive those FEMA funds, HHS has also addressed that. There, again, it's that double dipping concept. We cannot apply those to the PRF, so that would in effect have caused a double dipping between the PRF. And I believe, Aparna, did you want to address some of the FAQs related to the audit?
Yes, thank you. So there's one on here to talk about and then a few more on the next slide. But one thing we wanted to highlight, so for the commercial entities, up until I think this FAQ, or the June post-payment notice, HHS's language for commercial entities as far as whether or not the PRF funds would be subject to the audit requirements, they had used the term received, which was different from language in the Single Audit Act requirements, which is it's whether organizations are expending $750,000 or more in federal grants. And so that had been one of the questions that had been open with HHS really since the beginning when they first announced there would be the single audit requirement or audit requirement for these funds. And so just wanted to highlight that now they are saying also for commercial entities that kind of that same criteria applies, that it is expensing or expenditures of $750,000 or more in PRF funds that will be subject to the audit requirements. And so another big change related to the audit, the single audit or the schedule of expenditures of federal awards. Last year, late last year, the Office of Management and Budget had issued the compliance supplement, which indicated that at the time the expenditures that for PRF that should go on the CFA or the schedule of expenditures for federal awards would really match the reporting. And at the time, the reporting was meant to be for calendar year 2020. And so the intent was that the 12/31/20 year ends that would be kind of starting the reporting process. This was supposed to have started back in February. That would be the first time these PRF expenditures would get onto the CFA. Now, with this change in reporting that Georgia discussed and kind of breaking the reporting up based on period of when the payments were received, the CFA recognition is still going to be linked to the reporting submissions. So there's going to likely be, what that means is there's going to likely be multiple instances of a single audit if an organization meets the threshold. And so just as an example, for the June 30, 2021 fiscal year ends and for fiscal year ends through December 30, 2021, you will report on your CFA that first round of reporting, that's the window for which is open now. So the reporting that's due September 30, 2021. So for June 30, 21 year ends, that will be the amount that goes on the CFA. For the 12/31/21 year ends, there would be kind of period 1 reporting as well as period 2 reporting, since that period ends on December 31, 21. And so that's something to keep an eye on as you're starting to look into the reporting and also when the next round of reporting comes on. So for fiscal, what happens after that? So for fiscal year ends that are on or after June 30, 2022, for now, the guidance is not, we don't know how that's going to look. And so the guidance will be coming later on how that needs to be reported on the CFA. And also the expenditures, what goes on the CFA, it's going to really be the expenditures and our lost revenues that match up to the amount of PRF money that was spent. And so that's what's going to get reported on the CFA for our June 30, 2021 year ends. We are expecting to see the compliance supplement. So that's an annual process by the Office of Management and Budget. They update the compliance supplement, which contains guidance to audit all the federal programs that are subject to the Single Audit Act. And so that is actively being worked on, and we expect to see that sometime this summer. So we'll have better clarity on how we are supposed to be auditing these funds, because there's elements of the reporting that will be required to be tested as part of the single audit, as well as kind of testing the data that's being submitted. So more to come on that once we know more. All right. Georgia, do you want to take us through some reporting tips?
Absolutely. So you're probably here on this call because you have to get into this portal and do some reporting by September 30th. So let's talk about the portal and maybe what's happening there and how you can get ready and make your lives easier. So first and foremost, make sure that you have access. Make sure you can log in, and that if you have more than one entity, that all of your entities are there as you expect it. One of the earlier steps in the process is it will populate a page with all of the payments that you've received. So you'll be able to see the dates and award amounts and which entity it went to. And you want to make sure that lines up with your records. You probably have some sort of COVID funding tracker document that you've been working with. So you're going to want to make sure that everything you expect to be there is there in the portal. This became an issue for one of my clients already because they noticed that the targeted distributions for their subsidiary entity, a SNF, were not there because there was a SNF targeted distribution on May 22nd of 2020. So they had to go and create a new login for that SNF, and then when they did that and had a separate login under that tax ID, they could see that targeted distribution under that tax ID. So just keep in mind, targeted distributions will require separate reporting, and so need their own login to the portal. The general distributions can be kind of all consolidated up under the parent. Also, just want to draw your attention to the fact that there is this really nice data entry workbook. It would make life a lot easier to gather the data all into one place and make sure you have all the data for all the fields that are in the portal. And it also, just selfishly saying this from the consultant perspective, but for your consultants and your auditors, it certainly make it easier to review the data with them rather than, everybody having to kind of look at the portal all together. One thing to note is that data entry workbook doesn't include those 9 survey questions I mentioned before. So you'll need to take a look at the kind of longer narrative guidance to see what those questions are, or you'll just see them when you get in the portal, but just know that they're not there. The portal does require a number in every field, so you'll find that that's often a 0, but you do have to put the 0 there in order to kind of click forward and move on. And one thing I want to mention too is you can log in and out of this portal as much as you want and enter data, save it. It'll still be there when you come back. You don't have to do it all in one fell swoop, beginning to end. So, you know, it can be kind of an iterative process. And when you get to the end, the final page, you'll be able to download what your entries have been. So Melaney, would you talk us through this last bullet here, please?
Absolutely. So when we're thinking about, and we see this information throughout HHS's guidance, and they also have reiterated this quite a bit on their webinars, and that thinking about expenses to report, that they must be attributable to coronavirus and related to preparing for, preventing, and responding to COVID. And so again, the concept of the burden of proof is on the receiving entity. So for each of the entities that receive provider relief funds or PRF, really have to be able to demonstrate that any expense or expenditure that is reported against the provider relief funds does satisfy that overarching concept of really was attributable to coronavirus. And then also thinking about maintaining your documentation. So whether that be invoices or contract agreements or agenda and meeting minutes for, say, task groups and other groups that we're meeting related to responding to coronavirus, really important to keep all of that documentation together. And I think we'll touch on this a little bit, but now would be a good time to reiterate. HHS's information says to maintain it for 3 years, but we also want to keep in mind that there's other regulatory bodies who can come in and audit these funds. As an example, OIG could come in, the state could come in, and so really want to reiterate that HHS might have their set of time periods to retain these documentation to defend what was reported. Other federal agencies can have a longer look-back period, so it's good to keep in mind. We're kind of recommending thinking about oftentimes OIG to come in and go back 6 years. So just might be good to hang on to your documentation and really consider all the different regulatory bodies and really define a retention period that will keep you covered for some of these other entities that could come in and take a look at those funds. So that mantra, which stays true with this as well, is documentation, documentation, documentation. As clear and concise and tied together as possible is really the best practice.
Thanks so much, Melaney. So more reporting tips. You'll also find there's an other assistance received section in this portal. And just want you to understand that it's really for information purposes. This is where they're collecting information about, you know, did you get a PPP loan from the SBA? Have you received FEMA funding? So it's really, or in a lot of cases, we have entities that have gotten pass-through funding from their county or maybe pass-through from a tribe. That was coronavirus relief funds. Those are funds that come from the Department of Treasury. So I would say all in all, if you're not already quite familiar with, you know, grant accounting and grant management, and even if you are, you always just want to make sure you're tracking back to what's the original source of these dollars. It looks like it's coming from the county, but it's really federal dollars, and you need to know that and be aware of it because then it needs to end up on a CFA potentially. So for the sake of this reporting, just keep in mind the RHC testing distribution should pre-populate in the other assistance received section. And you just want to notice if you might be missing these. I have seen that occur with clients where it's not pre-populating, and this is not an area where you can manually fill it out. There's not really any action to take if that's happening. I think you would just kind of want to document that you've observed that. But there's honestly probably not much you can do. So also, you know, thinking about reporting period 2, I mentioned this before, but this is when that nursing home infection control distribution is going to come into play. So these were distributed on various dates. If you're a nursing home, you'll probably remember you got a larger payment on August 27th, 2020, and then maybe some smaller monthly payments from, I guess, November 2nd through February 12th of 2021. I'd just like to highlight, because this can really be a point of confusion, that it is different from the SNF distribution that you would have gotten on May 22nd. That SNF distribution is a targeted distribution, and it should be part of this period 1 reporting we're doing right now. Keep in mind that those nursing home infection control distributions can't be used with lost revenue. They have to correlate to expenses, and there's a specific list, like a bullet list of eligible expenses, but you know, it's kind of reasonable stuff related to infection control in your facilities. So you'll probably need to kind of set aside or have a strategy around how you're going to do that reporting for that distribution. Also, interest earned is part of the reporting, and they do separate out whether you earned interest on those nursing home infection control versus all the other general and targeted distributions. So if it was in an interest-bearing account, you're going to want to determine to the best of your ability how much interest you earned and fill that in. I will hand it over to Aparna to talk about the single audit.
All right, thanks, Georgia. So in addition to what I touched on earlier as far as the CFA reporting for fiscal year ends June 30, 2021, in the portal itself, there is obviously a section that asks about the single audit, and it's kind of a two-part, I'll call it a two-part question for, they've listed fiscal years 2019, 2020, and 21. First is whether the organization was subject to single audit to begin with, and so those organizations that would apply to, you would check those as applicable. But as far as the question goes for the PRF payments being included in this audit, given what I was just sharing in terms of when these funds need to be recognized on the CFA, we would not expect to see any providers checking yes for 2019 or 2020. Even the December 31, 2020 year ends, you know, you would not be checking yes as far as the PRF goes. For the June 30, 21 and December 30, 21, when that reporting comes due, period 1 or period 2, that's probably when you would check that the PRF payments were included in the single audit. So just something to keep note of. In addition to that, in terms of deadlines, there have been several questions that came in around this, so I thought I'd just take a minute to answer this here. So in terms of the deadline to get the audit completed, so the CFA is a schedule that's attached, it's a supplementary schedule that's attached to the financial statement audit. And so that is a separate process from the reporting that you would be doing in the portal. And so the deadline for, at least for the June 30, 21 year ends, the extension that was granted earlier this year is still in effect. So there's a 6 months, additional months available after the first 9 months. So the general deadline is the audit, single audit must be completed by 9 months after the fiscal year end. So that would be September of 2021, for example, for a 12/31/20 year end, or a March 22 for a June 30, 21 year end. But then there's another 6 months available beyond that. For the 12/31/21 year end, though, that extension doesn't apply, and we're not sure if there might be any further updates to that. But so the general deadline to consider is the 9 months after year end as far as completing the single audit. And for the other thing to clarify here, as far as the single audit or the audit of the funds, because the commercial entities do have a couple different options, is anybody that's getting a single audit done, if they are required to, that's submitted through the Federal Audit Clearinghouse. And for those of you on the call that are part of nonprofit or government organizations and you've had a single audit in the past, that's not new information. For the commercial entities, whether you chose the single audit or the financial related audit under government auditing standards, that is submitted separately to HHS, and they've provided an email address. So just a couple things to keep in mind as you're getting ready to finish reporting and starting to look ahead to the audit. All right, Amy, could you take us through this polling question, please?
Sure. So our third polling question, how are you feeling about understanding the changes to the audit guidance? A, very comfortable. We are already prepared for an audit. B, we have a good handle on the guidance. C, not comfortable. We are concerned about the audit requirements. Or D, not applicable. And for those that are attending and would like a copy of today's slides, you can download them from the folder that says slide deck and handouts. And then also know that we will be sending them out via email tomorrow along with a recording of this webcast. All right, so here are the results.
All right, thank you, Amy. Okay, looks like generally majority of you guys have a good handle on this, which is good. Hopefully we'll get further clarity when the new compliance supplement comes out, and then we can get going on these audits finally. All right. So with that, this is where I mentioned at the beginning of the webcast, we had gotten several questions submitted ahead of time when folks were registering, and also there's been obviously a lot of questions coming in live, which again, definitely appreciate that. And so wanted to take a few minutes here before we wrap up to go through some of those more common questions. And so Melaney, I'll start with you. There's been several questions around how the lost revenue would be calculated, especially when using the budget. So their plan is to use a budget, but if it's a fiscal year end, where a portion of that period of availability, the budget was approved prior to that March 27th date, but then there's a new budget in place for kind of the remaining period. Can you talk through again a little bit about how that would look in terms of the reporting and where that would fall?
Absolutely, and this is a question we see come up quite often. As we know, back in the public law language that was approved in December of 2020, there was language that said that to use the option 2, the budget to actual method, the budget needed to be established and approved prior to March 27th of 2020. And so for a lot of folks who have fiscal year ends during a calendar year, that budget caveat is a bit problematic. And so what oftentimes the folks we've been talking to is it falls into option 3 as far as using a hybrid model for calculating lost revenue. So as an example, folks will use their budget that was established and approved prior to March 27th of 2020 for that part of the year that is covered by that budget. But then they will use another method, sometimes performance, sometimes other pieces, that's kind of a similar concept for the remainder of the reporting quarters that they will do. So unfortunately, we have to really be, that March 27th date is really the big caveat there for us to look to. And then we do have that other reasonable method option where anything that would fall outside of that would fall. And again, thinking about that option 3, really the caveat there is additional documentation that HHS will have upload and submit as part of the reporting package. And so it's getting that put together and having that available and also retaining as well. Thanks, Aparna.
All right, thanks, Melaney. And also, just since we have touched on lost revenues, and I know Georgia had covered this earlier in the presentation, but I think there's just some confusion around that notion of, because the lost revenue will be done quarterly, that really only the quarters where there was true decline in revenues will be considered. And so if we could just go back through that again. I know a couple of the questions came around whether companies could pick maybe their own 3-month period within that period, or if it needs to follow the calendar year. So if you could maybe just touch on that as well.
Absolutely. And so if we think about this, HHS has defined the quarters to fall within the calendar quarters, so January through March, April through June, et cetera. And so we do need to calculate and provide that information in those quarterly bases. And related to the concept of thinking about each quarter individually, the way that the reporting portal is set up is that Any quarter where you have a lost revenue, it's going to reflect that full lost revenue amount. And then in any quarter where you might have a favorable revenue quarter, the portal is going to automatically populate a 0 for that quarter. So there is no negative effect for an entity that did have a favorable revenue, net patient revenue position. That's what's going to be reported as net patient revenue. Any favorable quarter is not going to detrimentally affect an entity overall. And I think if it's okay, there was some also tangent questions related to can we carry forward lost revenue to additional quarters. And we know from the information we have so far, those quarters are separate and distinct. And again, because there's no detrimental effect for a favorable quarter, it will cumulatively look at that lost revenue over the entire reporting period. So if we think about period number 1, we're going to be reporting actually January, that first quarter of 2020 through the second quarter of 2021. So lots of quarters, but it's only going to just look at that lost revenue in total for that time period. We are still waiting for additional information from HHS to know how excess lost revenue might roll forward to a different reporting period. So right now that's, and I think we'll touch on that a little later, but we don't know yet how the portal is going to function for that aspect of it. But hopefully that kind of helps provide some additional clarity around the lost revenue concept and those quarterly bases. So quick recap, we will need to calculate and report that lost revenue based upon the calendar quarters. And any favorable quarter will report as a 0 in the portal.
All right, thanks, Melaney. Georgia, a question for you, really a two-part question. So one is, we've gotten a variety of questions around, the types of expenses that would qualify for being reportable against the PRF funds. And so, if you could just touch on again what kind of the criteria that HHS is looking at, and kind of in tangent with that, since this is part of that process, if providers are getting other sources of funding, so we've talked about FEMA is likely to be a common one, or even some of the other sources, can you just touch on again how all that needs to be considered in evaluating the expenses?
Absolutely. Thanks, Aparna. So, keep in mind expenses need to be attributable to coronavirus. That means they were used to prepare for, prevent, or respond to COVID, and they cannot be reimbursed by another source or obligated to be reimbursed by another source. So thinking about those other sources, you do have to think about, is this expense just paid for by our patients? Maybe it's a lab test and the patient paid for it. You can't then apply that lab testing cost as a PRF expense. But in general, that obligation lies with you, the recipient, to determine and document that you do have eligible expenses that are to respond to COVID and that they're not otherwise reimbursed. And you want to be really thoughtful about all the other grants that you might have gotten, or the PPP loan program, certainly the biggest one where we see overlap in the same time period, and a lot of our clients have received that loan. So let's just say for PPP, that covers payroll for, and maybe other expenses, but let's say it covers payroll for an 8 to 24 week period. You are not going to then use any payroll expenses in that period as PRF expenses, because those payroll expenses are already reimbursed. So PRF funding should really be considered funding of last resort. I know we usually talk about FEMA funding that way, but the PRF guidance is clear on that, and also clear with FEMA that if you have applied to FEMA for certain expenses, that you should then not include those on your PRF reporting. And let's say by accident you do, and then 6 months from now you get approval from FEMA, you're not going to be able to accept those funds from FEMA if you had already reported them on if you had already reported those expenses on PRF because they've already been reimbursed by PRF. So just be careful in separating out what you apply to FEMA and what you apply to PRF.
All right. Thank you, Georgia. The same kind of concept will also apply for those that may have gotten a PPP loan. That's another one where, you know, if your loan was used to cover payroll costs during the covered period, those are definitely costs that cannot be applied against the PRF as well. And I know Georgia had mentioned this earlier in the session, but you know, the portal, the way it's set up is you're reporting those other funding sources or other assistance received, but the expenses you report are expected to be net of that. So there's not like a calculation in the portal that would kind of automatically net everything. So it's something to, just another reminder to be mindful of. All right, there are a couple questions that have come in live as well as previously around just the kind of the confusion now of the CFA now potentially having, you know, expenditures from multiple fiscal years. And so there, we are aware that's a disconnect, and but given the reporting is now set up to follow this period of availability, that does overlap. Each period does overlap. There is going to be, you know, expenditures that fall from, you know, earlier in 2020 for those that are fiscal year ends that now are going to be reported on the 21 CFA. And because the CFA recognition is following the reporting, it's essentially, if you fully spent the payment received, say provider got $1 million during this first reporting period, and all of that's been spent between lost revenue or expenses and lost revenue, then your CFA is going to show $1 million because that's technically how much of the PRF was spent to reimburse providers for that. So that is a little bit of a disconnect, but it's hopefully going to be a lot cleaner now since it's really just following this period of availability and the reporting periods that HHS has laid out. And also, I think a couple of other questions have come up about just understanding how, you know, is there a difference between the data that's got to be gathered and prepared for the reporting versus to prepare for the single audit? It's really the same thing because the source documents that you would be using to compile your expenses, compile the lost revenue calculations, that's going to be really the same basis for what's subject to audit. There are, as I'd mentioned earlier in the webcast, there are also elements of the reporting that HHS is going to expect would be subject to audit. What those are, we do not know, especially because the guidance that was previously provided has been superseded. So once that new compliance supplement comes out, we'll know exactly what it is that we're supposed to be testing in terms of the reporting, but just thought that would be helpful as a reminder as well. I think we have time for a couple last questions. And Melaney, I'm going to switch gears and kind of talk about reporting. And so there's been several, if there are, you know, first round reporting, there's excess expenses or lost revenues. Here's what I found. Can you talk about how that's going to play out? You know, is there ability to carry that forward, or what are we thinking or seeing in terms of how that excess can be considered for future reporting periods?
Yeah, and this is a question that we are chatting through with a lot of folks. And right now, we don't have a good viewpoint as far as what subsequent reporting periods are going to look like, if it's just going to be a continuation, because as we know, when we look at the availability kind of time periods for each reporting period, there are overlaps. So that we're waiting for additional guidance from HHS to find out really what's going to happen and how this is going to look for future periods. So because, and like we mentioned, there is overlapping time frames, is probably a better way to put it, between the different reporting periods. And so this also brings up another point for on our end and our tracking and our documentation purposes. It's going to be very important that we are not reflecting, say, the same dollar of net expense to multiple reporting periods. And so it's more of a documentation concern on our end to make sure we've got that really clear for audit purposes, like Aparna mentioned, when we get to the single audit or if there's other audits that occur for these funds. So short answer is We're still waiting to see really what HHS has set up for the future reporting periods, but it would be a good idea for us to thinking about it, and Georgia touched on it as well, as let's keep that eye towards subsequent reporting periods and really getting our documentation in place so that we can clearly and easily substantiate which period a dollar of expense was reported is the best we have at this point in time. And if I may, we've also seen quite a lot of questions that have come up, and I apologize, Aparna, if we were going to get to this as well, surrounding elements of, I have more than enough lost revenue to fully utilize the PRF that I receive. Do I have to take a look at expenses and quantify those and report those? And the guidance we have from HHS right now is that there is an expectation of contemplating your net expenses and expenditures and reporting on those. And this would be something that also would be taken a look at. So I think it's really, each entity is very unique in your circumstances, but at least our current understanding with HHS guidance is that there is a presumption that you will take a good faith effort to look at what expenditures you had incurred and report on those, because that is the first step. We cannot bypass the expenditure side and just go straight to revenues. That is the first part we get to when we go to the reporting portal, and so that would need to be reported as well. And then we definitely very unique situations about the concept of just reporting zeros for your expenses. I think there's some things to talk through with that. And again, everybody's situation is unique, so it's difficult to triage that on a broad basis, but just to say that HHS does have it outlined that expenses will be reported ahead of revenue. So one of the new pieces is that if an entity does have full utilization of their provider relief funds through net expenses or net expenditures, they do not, at least currently, do not have to report lost revenue. So that is language in the June 11th reporting guidelines document, and also happy to talk in more detail about that. But that is one new thing. If you fully utilize your net expenses, expenditures, the portal does not make you report lost revenue. You will report revenue, it's just not lost revenue.
All right, thanks, Melanie. So I know we're running a little bit behind, so we're gonna move on to wrap up. And I know we did not get to everybody's questions during this session. We will definitely be following up with you afterwards to make sure we're getting you the information you need, hopefully, to answer your questions. All right, so I think we've covered a lot of this in previous discussions, but just as a kind of a closing summary, these are still some areas where we are waiting on clarification. So, as Melanie talked about, just what the process is going to be able to carry over any excess expenses or lost revenues. The portal really is not contemplating that just yet, and HHS, I don't think, has gotten that far in how it's going to look. They were really focused on getting the portal up and running for this first round of reporting. Also, given that overlap of periods that Melanie talked about, just how that's going to look to make sure that there aren't any double dippings happening potentially with the expenses. Is there going to be the opportunity to potentially revise reporting retroactively if things change that require that? Not sure at this point. And then all the audit guidance I've been talking about to this point related to single audits, which traditionally is really for the nonprofit and government agencies that do get federal funds. For those of you that are part of commercial organizations that may choose the financial audit under government auditing standards, the guidance around how to audit that is still not clear. And so we are also hopeful and waiting for guidance around how those audits need to be and what we would be doing as part of that. All right, I think a lot of these best practices we've covered, but again, I think just the thing to mention again and again is that documentation. I think I said it at the beginning of the webcast, but HRSA really, every other sentence I feel like they said documentation is on the burden of the reporter, or the burden of the provider. So there's definitely going to be a lot of emphasis on, can you substantiate what you're reporting? So the one takeaway from this slide would be just keeping that documentation All right, with that, want to get to the last polling question. Amy, if you could go for it here.
All right, so we're squeezing this one in at the end. So this is just to know if you would like any support in any of the following areas. And you can check all the apply and hit submit. And then also, once you've completed all CPE requirements, you can download a PDF of your certificate from the CPE progress window. And we will be emailing out a copy within 3 weeks if you have difficulty downloading it now. And here you go.
All right, thank you, everybody.
All right, and here's a link to an online survey where you can provide some feedback for today's presentation. And so thank you, everyone. And thank you, Georgia, Aparna, and Melaney for a great presentation. Thank you.
Thank you.